Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing today? Ooh, that light, right? Hey, this is just a quick show we do. We call it the Closing Beat. We're financial advisors here at Jazz Wealth. We just come to you every day to share with you how the markets did, the good, the bad, and the ugly. And all we ask is that you keep us in mind here at Jazz Wealth. We're financial advisors. We do 4 different things. Break it down for you just to be kind of funny. We manage our own portfolios. Of course, they're all listed right on our website there for you. So we'll use those funds to invest for your goals. They're all expense-free, by the way. There are no charges for those funds or expense ratios of any kind. And best of all, in plain English, you can go read about them and see their performance, if you like, right on our website. Number 2, I want to make sure you're saving for your goal. I only want you to invest for whatever your goal is, then stop. Right? This isn't one of those companies where we just start selling you stuff. Everything else is included. So just save for what you need to save for and stop. So we'll work out your goals exactly for you. Number 3, we'll help with any accounts you have, HSAs, 401ks, even if you have them at your job or somewhere else. We're going to help you with those to dial them into your goals so you know exactly what to do there. And number 4, we teach. This is not the only class we do. Every Thursday, besides tonight, we have a class for customers that we do to teach them something new, just to try to keep you learning. More importantly for me and selfishly, it's to keep you asking questions. I'm not the advisor that invests for you and then goes and plays golf. I invest for you and then I try to get you to ask more questions, because the more you can learn about the markets and your investments and things, well, the better off you are. So this class is going to help you do that. Today we're also playing a game. It's called Guess the Dow, bottom right-hand corner of your page. You're welcome to go take a guess if you like. No purchase necessary. If you're the closest without going over, we'll send you a $100 gift card. And if you're a customer, we'll credit your account $100. Unless you would like the gift card. There's no class tonight, by the way, because it is my little one's birthday. Yep, she's not so little anymore, but this is today's her birthday, so we took the night off. I hope you understand. Anyways, let's talk about the stock market today. We got the Dow higher by 123 on the S&P, and 87 on the NASDAQ. What happened? I thought everything was scary there. We just reversing course? Everything's good? Well, it's a little bit of too far, too fast, and we'll dive into that, of course. The markets were basically flat, a little bit of a small gap that was possible opening today, but then those services numbers came out that we've been talking about here the last couple days, and the markets just plummeted, just like real quick sell-off there on those numbers. Why? Because they missed. So I'm going to go over to that actually and trying to include some more things for you here, trying to make it set apart from other channels. We know you have a lot of other choices in your financial media consumption, and we appreciate you choosing Jazz Wealth. So I want to make things interesting for you, and oh boy, do we have some cool things coming. Anyways, on the charts there, you see the manufacturing numbers, which came out on Tuesday, versus our non-manufacturing numbers, which are just services numbers that came out today. Services numbers did plop down here to 52.6. That's unfortunate, right? That scared people here in the short term, caused the markets and the algorithms to sell off. Everybody was pretty much expecting if they were lower that the markets would move lower. And then everybody was like, wait a minute, that means that the Fed's going to have to cut rates. And you immediately saw traders run to bonds and start making their decisions on the Fed rate cuts, which, by the way, now there's the 90% chance of an October rate cut. So it wasn't that the markets fell and then all of a sudden people were like, okay, well, that's over. We know that. Let's buy the market. It was, yeah, we're a little extended in the short term, but also we saw everybody starting to assume that there's definitely going to be rate cuts in October. We're now at a 90% chance and a 50% chance in December. So that number rapidly skyrocketing. Anyways, a couple things I want to point out. We were expecting 55 for the number, so a lot of people were expecting it to pull back a little bit, but not as much as it did. The severity of the pullback is the worst that it's been since August of 2016. That's the largest drop since 2016 versus expectations. And if I could, let's try to do something fancy on the fly here. Oh boy, you're asking for trouble here, bud. All right, so if we put the markets on top of this here, and we go to the last time that we had such a severe drop in manufacturing, that's going non-manufacturing. That's going to be over here, August of 2016. You can see it on the charts there. And we look from the point that dropped, how far did the markets fall? Well, in the background, that gold line there is the S&P. The drop over the next 2.5 months represented about a 4.5% drop. Now, we've basically fallen that far already, right? Because we were at 4% this morning when the numbers came out. So it just lets you know that, yep, there is a possibility of some weakness in the short term. However, it's not a catastrophe. It's not going to be the end of the world. It just means we may pull back some more. So even though today was a little bit of an oversold bounce, is the way most people like to look at it, you could go by one moment in time in history and say, all right, well, when the numbers both come in weak as they did in such a wider spread as they usually are, typically there's a little weakness in the market. So We'll go over to the stock market here. This is the S&P futures. Yesterday, I drew this line to show you, there's one little technical area here that the algorithms may respond to. I left the line for you. And yeah, algorithms did respond to that support. So for now, technical traders will look at this and say, that's our support. It's not great. Right? It's not the best of the best that we can get, but for now we know that the computers are responding to it, other technical traders are responding to it, and so you have to go with that number until proven otherwise, which happens to be around the 2860 area. So we got a little bit of support off of that one. We had also fallen really far, really fast. So a little bit of counter trend buying, a little bit of people saying, okay, 4%, that's good enough. They wanted a little bit of a pullback there. I've had a few customers that have been sitting on the sidelines. They just wanted a little discount relative to paying at highs. And so you got people like that around the world making decisions. That's sort of understandable. So that's the S&P 500 still flirting around here now with our new support area and the 200-day. Remember I said, anywhere between here and the 200-day, I would accept that. Even if it was a little bit lower, I think people would still assume that's support. If we look over at the Dow, you got a very similar picture here. You could also draw the same line. It's not pretty, but it's the same little support line. We'll use the 200-day moving average because that's more obvious, at least for most people there. As we go down into the individual sectors, did I cover everything I wanted to cover there? No, I did. Okay. So if we go down to the individual sectors, crude oil, that's going to be 8 days in a row to the downside. And look at the little support area here. We'll extend our line. It's been there every day for you. You can see that everybody responding to that, not very excited because this was more of a bullish potential breakout there. But all in all, with the oil inventory numbers coming in higher than expected yesterday and a little bit of bleed over today with that going on, people are like, well, all right. I mean, it's still down on the day, but you got a little support there to work with, and that's probably going to act as short-term support. So if you're a technical trader, you very likely are going to see this bounce over the next couple days. Even if it's not that much, I would bet that people would use that as support for the active futures traders there. Otherwise, we've got utilities. They didn't really participate today. Utilities have been a really strong area. REITs have been a strong area. Consumer staples, we've talked about all that. But utilities didn't participate. And I sort of attribute this to like a viral magic trick, right? You ever see someone comes up with a magic trick and you're like, oh man, I'm going to share that with my friends. Next thing you know, it's all over TV, all over social media, and you go show your friend and they're like, yeah, I saw that video. I know how you did it. Right? That's kind of like the utilities. We all know they're really strong. We all know they're doing really well. Pullbacks in that continue to get bought. But now it feels like people are saying, I get it. I had my shot on utilities, and they're not there, right? I had my shot. Everybody knows about it. Everybody knows about the performance. And you kind of feel like a little bit of worry there in the short term that people aren't so interested. Where do I get that from other than just watching it every day? A little bit of uptick in volume. So you see that uptick in volume there, lots and lots of volume, well above average, but next to nothing in terms of a move, right? That just gives you a hint that there's a little repositioning going on there, and that sector could be just taking a bit of a break. Industrials, we talked about that, slicing through the 200-day moving average today, trying to recover from that. So it's sloppy. There's a lot of sloppy areas in the market right now where you could say, well, that's kind of support. I mean, maybe people like that area, but it doesn't quite make it down there or slices through a little bit. That's industrials for you. So best case scenario for now, just a little bit of a bounce. I think that's pretty good. All right, bonds, boy. Those yields, man. If you like low rates. So what was it? The 2-year moving to low, hitting a new low, I guess. Here's the 30-year we're looking at directly. So 30-year prices shooting higher. Overall rates moving lower. Just incredible what's going on over there. You now have essentially, you look at the 10-year and you're at 1.5%. Pretty close, right? So you're 1.5% on the 10-year. And if you were to buy the S&P, you get 2%. That's unfortunate because your mind, maybe some of you watching, you're younger and you go, oh, I'll just buy the S&P. I get a 2% yield over there. I'm only going to get 1.5% in bonds if you were even considering those for whatever reason. But it means you're taking more risk. And so imagine the aging population, those close to retirement, in retirement, they can't live off that, right? Inflation is more than what they're getting overall, right, in their bonds. So it forces them to take a little bit of a risk. Well, what we talk about this, I've done numerous videos on target date funds. Target date funds, the closer you get to retirement, they have to shift to conservative things like this. The big problem in the industry right now is they can't shift money in their 2030 funds, 2025 funds and things. They can't move them to too much in bonds because the return's not there. They're all of a sudden going to be a low-performing target date fund. They're going to get kicked out of 401k plans. You're going to be a bad fund manager, all this stuff. So they're being forced to keep money in the market, which is keeping the market higher, right? But unfortunately, it's keeping more risk in those retirement target date funds where you're close, where you're within 5 to 10 years of retirement. You can see it on any risk graph that you plot for any of those target date funds. I look at so many of those every day. It's a little bit unnerving there. So just wanted to point that out. That's probably something that's getting talked about on the Bloomberg channel and things like that. All right, semiconductors, they actually did really well today. So 1.5% gain. It was one of the better areas of the market. What have we been kind of talking about here? When the markets have been selling off each day this week, I kept saying semiconductors really not so bad, right? You would think it could be worse. It's really not that bad. Looking through a lot of the semiconductor stocks, not all of them, but a lot of them were holding their own. They weren't looking too bad. So today, it's understandable that that's one of the better performing areas of the market. People recognize that relative strength. If you're a short-term active trader, which we are not here at Jazz Wealth, I see the comments every now and then where people go, oh, he's like hiding behind a retirement guy, but he's really active. No, not the case. But if I realize there are people that are, and so I like to point those things out. If you're an active trader, you have to be able to spot relative strength. Just have to be. I try to point it out when we see it, but you're not going to make it very far if you can't point out relative strength there as an active trader. Okay, moving on. Let's go to some individual stocks. Oh, other than that, every sector was green today. So every sector finished in the positive. You can see it up top there. Probably no need to cover all of that. Pepsi reported earnings. Stock gained 3% today. At its high, would have been the 6th best performance relative to earnings, meaning they release earnings the next day, the stock has a great day or a bad day. This would have been the 6th best day. Unfortunately, it did close a little bit lower, so it doesn't rank as the 6th best day. I believe it's now the 8th best day. Still, it's a good day, 3% hitting new 52-week highs there. They beat on earnings, beat on revenue, and I just kind of read through just for fun, so I made some notes if you're interested. They had more advertising and more focus on their low-calorie drinks, which apparently are doing really well. Bubbly Water, Propel, Life Water, and Pure Leaf all saw double-digit growth. They also seeing some success in their low-calorie versions of Gatorade. So healthier drinks for, who would have thought? Healthier drinks for Pepsi doing really, really well there. More importantly, we own this if you're looking through our funds on our website there, the Consumer Staples Fund and the Dividend Fund, we own Pepsi as well as Coke in there. But Pepsi pays out a 2.75% dividend, or it's yielding 2.75% right now. The S&P is at 2%, so doing a little bit better than the overall market in terms of yield there. But this is what's interesting, and you guys ask these questions about dividends all the time, and I always say, don't just look at the yield and buy the stock. You want to look a little bit deeper. Pepsi, for example, and I'm not telling you to buy it, I'm just giving you stats here. So Pepsi, they are one of those companies that always increases their dividend. And that intrigued me. So we look back to see how far. For the last 46 consecutive years, they have increased their dividend, right? So that's almost the best out of any stock you can find there. Now, if you look through the sector, 3% is the average. So Pepsi is currently yielding 2.75. 3% is the average, so it shows that they got room to go. Also, if you're really geeky and you want to look at payout ratios and stuff like that, it's a little bit better than Coke. I don't know how deep you want to dive into this stuff, but I'm testing the waters. We'll see what comments we get there. So it lets you know that there's still room to go. They're kind of like Target. Target is, they hold back in terms of dividends so that they can continuously raise the dividends there. So Target is like, or Pepsi is like the Target of the retail sector, I guess, in terms of the overall yield. So still some room to go on Pepsi. Obviously looking good. Very happy with that one in terms of being in our portfolio. So awesome. Let's move on. Tesla was in the news today, down about 4%. Well, look, they produced 96,155 cars. They delivered 97,000. However, if you read in the fine print of that, I did spend some time reading this here. The report says that number could be off by as much as 0.5% or more. Those were their words, not mine. 0.5% or more when they eventually report their earnings on the 23rd of October is when they... Is it the 23rd? I think it's the 23rd of October. They report their earnings. The reason why is because they don't consider it an actual delivered vehicle until the person has it in their hands and the paperwork has cleared. So there's some cars that are in process. Look, if you're giving them the benefit of the doubt, then that means that's good news to you. If you look at them as trying to massage the numbers, then you look at that and you kind of laugh at that stat. But that's what they said in that statement there. They said the number is conservative as we don't count delivery until the consumer has the vehicle and the paperwork is correct, was the wording there. So we'll see. It was down 4% today. I don't know if that means a lot to you, but there you go. GoPro getting smashed today, 19% to the downside. They cut their revenue, profit outlook. They just had a lot of negative stuff to say today, all because of the Hero 8. They have these production issues. It's like, why isn't somebody on this? I feel so bad for GoPro over the years, but the Hero 8 is now going to start shipping in the fourth quarter, which that was all they gave, by the way. So it's like, are you going to make it for Christmas? Are we going to like suffer on sales here? Versus start shipping now. They're having some issues there. And people, I think, are just kind of over it. Volume was ridiculously heavy today. You could see it. Volume way up here, just super, super high. Anyways, that's that one. We don't have to spend a lot of time on that. Bed Bath & Beyond. So it ended up gaining about 2.6% today. Revenues missed, their earnings beat, so all was good there. Store sales, comparable store sales, which a lot of retailers, that's a metric that we all follow there, down 6.7%, and they guided a little bit higher. I think that's what helped them throughout the day, was they said, look, it is what it is this quarter, but we're going to guide just a little bit higher in terms of revenue to hopefully make up for the fact that they missed this quarter. So we'll see what happens there. Facebook a little higher, 2.7%. They announced Threads for Instagram. I don't know. I don't know what the difference is between that and Stories. I didn't really pay attention. But they announced Threads for Instagram, which is essentially like a Snapchat ripoff is what they're doing there. So if you happen to look over at Snapchat, got about 3.3% decline there. A little extended in the short term if you happen to like that sort of thing. In the S&P 500, you got 37.2% of the stocks above the 50-day moving average, and that number's been volatile, man. We were at 65% last Friday. Now we're at 37.2. That's a volatile number, and it lets you know that we're oversold in the short term. That's why I report these numbers, so that you can get a feel for this stuff. There are actually 89 stocks. Let's play this game here. There are 89 stocks. I'm going to just pull up, I know Booking, right? That's an easy one. We own that one, so it's an easy one to look at. But this one I will point out. 89 stocks that slid through their 50-day yesterday and went back above it today. So that's how close we are to the 50-day moving average. And I initially did this research to see if we could find how far away stocks were from their 50-day, to see if we could find any extended stocks to do some stat research on. But look, 89%, or let's call it 1/5 of the S&P 500, sliced through the 50-day yesterday, recovered today. So you got Booking, Apache was one of them. It's not as pretty looking, but you can see it down there. Chipotle was another one, below it yesterday, above it below. You see what I'm saying? Is that interesting to you guys? I don't know. Just pointing stuff out and see what sticks, I guess. Anyways, there were 8 new 52-week highs today. Every one of them finished in the green. You could probably guess Pepsi's one of them. That was the best performer out of the group there. The rest of them were all REITs and then Pulte Homes. No, I'm sorry, not Pulte Homes. Was it Lennar? There it is, Lennar. So Lennar was just from earnings the other day, still killing it there. You had 21 new lows representing 7 different sectors, pretty broad span there. Now here's the catch though, let's go like this. Every one of the oil names that were in this category, I think there was 8 of them, they did hit 52-week lows, then they finished in the positive. So here's Concho, they hit new lows and finished down there. I've got EOG, same thing, they hit 52-week lows, yeah, you can see it. So new 52-week lows started to recover, right? We've got a little bit of oversold sort of positioning going on in the oil service names, the oil stocks there. FANG is probably the most obvious, hitting new lows, recovering rather sharply. You expect to see continue to recover, so too bad. E-Trade. Oh, sorry. I always type that wrong. EFTC. No? They're not popping up? Come on now. E-Trade coming up? There it is, little glitch. So E-Trade actually finished positive on the day. They are the latest to go commission-free. It's like all these guys went into a room, they met together, and they said, you just want to cut the commissions off? Okay, let's cut the commissions. I don't get it. I really don't get it. But E-Trade was one of the lows. It did finish positive. Schwab hit new lows as well. Ameritrade did as well. It's not an S&P stock, so it doesn't really count. And a lot of these stocks that hit new lows today, like FedEx, they did reverse, right? They're just a little extended in the short term, so they did reverse. Carnival Cruise, we've been talking about each day, hit new lows, still negative on the day, but did reverse off of its lows. So same thing. There's a lot of, I've used this example in the past, there's a lot of the sort of stocks that are like a bow and arrow, or a bow, where you pull the bow back and they're very extended and you just can't pull it back anymore in the short term. You got to let go of it at some point. You can't hold it forever. And it just looks like there's a lot of that just trying to snap back there. So it could be helpful for the overall markets just in at least the coming days here. You do not expect the stock market to fully recover everything that it just gave up, right? Couple day rally, maybe it bumps its head against the 50-day, and then we need a catalyst. We need something. We need earnings season. Of course, the trade negotiations are starting. Those are maybe two things, although earnings maybe not so exciting. Maybe the trade news, that's about the only thing that could cause this to just V-shape recover off that bottom there. So I don't think it's going to be a rocket ship straight back up if I had to guess. And that's all I'm doing here, is just guessing, not giving advice. You hear that, SEC? So we got AMD. So AMD was supposed to be 2.9% higher in the next 5 days. It's been 3 days. It has to get to this line right here. It held up really nicely. This was one of those semiconductors we talked about every day that it's kind of been holding up, even though today sold off. It recovered all of it rather quickly. And so there's a chance, right? You got 2 more days for it to get there. We will, of course, keep track of that stat for you and see 64.6% of the time when it was where it was at right here, which has been on the first. 64.6% of the time, it ends up 2% higher, and we just had to hit that number there. I don't know, it's kind of fun to watch these things. I think it's fun anyways. What else do you got here? You got Six Flags is reportedly bidding for Cedar Fairs. I find this interesting because I just went to Cedar Point. So Cedar Point, Carowinds, all the parks that they own. Cedar Fairs, which owns those parks, is the 8th largest amusement park in terms of, I know this because we went to the little museum at Cedar Point. So it's the 8th largest amusement park by visitors, right? By actual attendance there. And so Six Flags apparently is trying to buy them. Wells Fargo said the deal's not going to happen. And I don't know anything. Wells Fargo is just like, it's just not going to happen. Six Flags is still looking for a new CEO. They've got a lot of cultural issues to work through. It's not the right time for an acquisition. And he just thinks the deal won't happen. So we'll see what happens. We mentioned E-Trade now being commission-free. I think that starts on the 7th, though. You got a few days still to go. FireEye reportedly hired Goldman Sachs, put itself up for sale. Didn't really read into it a whole lot. I know it would be good for the sector or the subsector if there would be a little consolidation, but nonetheless, I didn't look at it too much there. One of the analysts says $22, if it happens, would be the likely price that it sells itself at. And that's really what I got. As far as tomorrow, got the big old unemployment number coming out. That'll be the focus. Unemployment rate currently at, expected to be at 3.7. Unchanged is where we hope to see that. And if it is unchanged, then expect a lot of the focus to go towards the average hourly earnings, average weekly hours worked, things like that. And the non-farm payrolls, of course, comes up all at the same time. So good luck if you're trying to keep up with that at 8:30 Eastern tomorrow morning. You got 3 Fed members speaking tomorrow, including Fed Chairman Powell at 2 o'clock Eastern time. Las Vegas Sands takes over in the S&P. We've been talking about that. No surprise that happens today. And what else do we have? Intuit. Intuit reaffirmed their full year guidance. Stock was a little bit higher today. That's pretty much all I have. Yeah, a lot going on, but it seemed like I'm getting more organized, going through it all a little bit faster. I'll take your questions if you happen to have any, and we'll see what we can do. Harry's saying Fidelity. Fidelity's next, right? So everybody's cut their commissions besides, I believe, Vanguard still has the $3 or $4.95, which is nothing, guys. Like, I want to pay. I told you that yesterday. Like, Thinkorswim, TD Ameritrade, Interactive Brokers, TradeStation, they don't exist if we don't pay a little commission. Maybe we should be getting paid trading based on volume and everything. I agree with that, but holy cow. Holy cow, yeah, that's crazy. Retail brokerages aren't attracting millennials, and I think what the retail brokerages are realizing is they don't have to offer all of these bells and whistles to attract people to trade the markets. That's wrong. I believe that's absolutely wrong. I don't have much of an opinion on these shows, but I coming from someone who was in that space, very active trader, I want the stuff. I'm willing to pay for it. There is no way an active trader makes $1 on Robinhood. Anyone that says they make money consistently trading on Robinhood is welcome to come down to the show here. I will definitely vet it for you, and if it is, I will shake their hand and apologize to them on the show live, because it just is not possible. So I think companies like E-Trade, Fidelity, and the like are saying, We don't have to have all these bells and whistles. Let's just give them a basic trading platform, and yeah, you could trade for free. Have at it, right? No, I don't like it. I don't like it. Is Charles Schwab a good investment? I think you mean the stock price there. Yeah, you use them as your broker and absolutely love them, and their customer service is incredible. That being said, well, so in that case, if you're looking at something like that, you have a personal attachment to them, and that's understandable. It's like when people tell you, hey, invest in the things that you buy on a regular basis, things like that. If you like what's going on there and how they approach business and everything, nothing wrong with investing in a company like that, especially when it's trading at a discount. Over the last, how many days has it been? You're talking about normally having to wait months and months and months. And here, in just the last 14 trading days, you get a 20% discount. Huh? Who don't like a 20% discount? You still expect the markets to find a bottom and snap back? Oh, okay. Yeah. I mean, in the short term here, you're already seeing that, so I'm with you. Next few days, unless the unemployment number just somehow ticks way higher, 0.2 of a point higher or something, you're right. I mean, the momentum right now in the short term is just a touch to the upside. Yeah. You like the industrial REIT sector, do you? Prologis there. All the REITs are really doing well, and that's not necessarily, it's sort of misleading because it's not necessarily because of an individual company. It's because all of the investors out there hear REITs doing well, REITs doing well, REITs doing well. Well, I don't know what REIT to pick, so I'll pick an ETF. You buy the ETF goes out and buys all the stocks for you. So a lot of this support is coming from these people buying ETFs. If we get spooked, or even the retail trader gets spooked out of REITs, or you have one big company, one big fund manager start to move out of REITs, you could see a little bit of that old saying where the bears take the elevator. Yep. Thoughts on the brewing trade war with Europe? Putting a tariff on a whiskey. Come on, man. Tax the planes. Tax the stuff. Don't tax the booze. I'm not saying anything's wrong with Robinhood. I've heard nothing but good things from people that like to use the platform. I'm just saying it's a hobby platform. That's all it can be done. It's for hobby. You like a stock, you buy it, you walk away for a while. Not for the active trader. Yep. Tastyworks, yeah, good company, good people too. I'm all for any company in a space that's willing to teach at the same time, right? I'm all about it. We're advisors and we teach. That's big to me. If you are a mechanic and you teach your customers, I'm all for it, right? You got to have good customer service, of course, but if you're going to teach people how things work or teach them in a more in-depth way, I'm all for it, any company. So, yeah, I agree with you there. Yep. Should you throw your $600 into your IRA right now? I'll say this every single time. You should invest. If you don't have like lump sum monies to invest, you invest whatever you need to invest every week, small amounts to get to your goal at the end of the month or at the end of the year. And if the markets fall, I'm all for raising it just a little bit, get a few more dollars in there. I don't mind. Started buying out of the money puts for March 2020 and 21. Okay. What's your probability of making a profit on those? You know what you're buying, right? You know the lottery ticket you're buying there, Mr. or Mrs. Unemployable? Any thoughts about, are you asking about Carl Icahn? I like the guy. You think the Fed's, traders will be bullish because they think the Fed will just keep cutting rates. Yeah, but the Fed doesn't, that doesn't help, right? So if we were coming from 6% rates, which a lot of you never saw, you don't even know what that looks like. But if we were coming from a 6% benchmark down to like a 3%, like we did the financial crisis, even more than that, now you're making a difference. We're talking about a quarter point on next to nothing. You realize that's like, we're hinting at those negative rates there, and then what's the Fed do then, right? You have to pay your bank to put money in the bank. You know what that means? That essentially forces you to invest in the stock market. But that's a whole video in itself. You tested it out to see if you got commission free today? Yeah, they honored their word. They were the fastest to do it. So TD Ameritrade officially, yep. You tested it out. I like it. Place to trade, just see what happens. Next thing you know, 150 trades later, I could see it. Now, the pattern day trader rule still exists. So, you can only do what you can do there. It's not like you can just trade all the time. 3.7% is tomorrow's expectations on unemployment. It'll come out before the market's open, so we'll get a chance to see what that does beforehand. Yep. WeWork sort of fading away right now because they're going to wait till next year to do the IPO. They're going to do it just like Uber. I'll show it. I'll point it out as they do it, but they're going to do it just like Uber, with maybe the exception of more of a direct listing. We'll see. Yep. Yeah, I'm familiar with that. Well, we'll stay out of the politics talk there. New books on investing. There's not a lot of good books written these days on investing because it's not profitable. You know what I mean? You have to be a big name like a Warren Buffett or it doesn't work in general. There are books out there, but the oldies are still the goodies. You know what I mean? I got a whole shelf full of them here, but I just haven't found anything that's caught my eye in terms of new books, new excitement there. Nah. I like psychology in terms of investing and trading as well, if you like that sort of thing. Malcolm Gladwell touches on that, a couple books. Hey, other than that, I think we nailed it, right? I think we did it. Remember, if you're one of our customers, no class tonight. I'll be out, and we'll be back tomorrow to do this all over again. If I gave you a new stat, something new, something interesting you didn't know before, give me something. Hit the subscribe button if you would, or just keep us in mind here at Jazz Wealth. I have to ask for stuff. Oh, that means it's time to go. TVs are turning off. Enjoy the rest of your evening. Thanks for watching so much. We'll see you tomorrow. Adios.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.